What a day to have you in the time of activist investments when we see Exxon, Chevron, both being taken to task at their annual general meetings by, in this case, ESG campaigners. But the role of the investor right now, is activism back, and what do you make of these sorts of moments?
Yeah, well, as I said in my interview earlier, I don't think it's ever gone, but I don't think that many really true activists around. For that matter, there never were that many, but today probably less. I think that's possibly because, as I said, for activism you really need permanent capital, because when you really want to make a statement in a company and take a lot of stock in it, you might have to keep it for many years. I mean, you have to be very patient to be an activist, and you have to be a good negotiator, but you still need that permanent capital, which a lot of the hedge funds that were doing it or tried to do it don't have. And I think when you get a bad market, that permanent capital isn't there. Also, I think you have to have a very thick skin, and so there's not many people that really can do activism,
Carl,
and that's why it's so lucrative, I think.
So lucrative, there aren't many of them who do it in the way you do, as you say. But when you see these sorts of moments in companies that, of course, you're a man exposed to energy companies in particular, taking big stakes, trying to turn around the overall, performance of the businesses in which you take stakes. But when you look at energy investments in particular, when you look at the role of ESG, environmental investments, the pushback on climate impact, is that something that makes you sit up and listen? Are you aware of that and thinking about the profitability of these businesses going forward if they're being forced to make these changes in terms of climate change?
Yeah, I think climate change is a very interesting area. I think that renewable fuels are here to stay and will increase in one form or another, simply because, the voters have spoken, and I think that was part of the campaign with Biden, that, you want clean air. I mean, everybody wants clean air. Nobody wants to walk and feel they're breathing in carbon. So this renewable fuel is really there. We have a couple of refineries, for instance. We own CBI, and they got a couple of refineries. We're already changing some of those refineries, to transition some of the power of those refineries into dealing with renewable fuel rather than fossil fuel. And that is going to be the wave of the future, and I think it's going to be a very interesting area to invest in. The refineries, interestingly and anti-intuitively, are not really in a bad position because of this, because a refinery is the least costly way to build a renewable fuel plant. Renewable fuel plants cost hundreds, if not billions of dollars to do. But if you have a refinery and it's in good shape and you have capital in it, you have to have hydrogen to do this and whatever, so that you could do both. You could transition part of it. And so that's what we're doing, and I think other refiners will do it. Being that said, I was reading what the senators of Iowa want to do, and make it part of the infrastructure bill. And I think that's a great idea, by the way. I think it should be part of an infrastructure deal. The government has to be part of this, because renewable fuel costs more than fossil fuel to refine and to make. So I think what they're doing there is a good idea, but don't throw the baby out with the bathwater. You should still keep small refineries are having problems, real small refineries that don't have capital. Luckily, we have capital at CBI, and so we're a middle-sized refinery, I guess.
Big picture, yeah. Do you think if companies like Exxon don't pivot to the way voters are going, you'll see more of these shareholder revolts?
Well, now you're going into another area with Exxon. I mean, I'd like to really focus on companies, and we're not involved with Exxon or Chevron. So you know, I've always believed that there are a lot of companies. I don't want to talk about specific ones that I'm not involved with, but I've always believed that a lot of the problems we have in this country are, while you have some very good managements, there are too many poor managements and too many poor boards. So if you get me going on that, we'll go for a long time as a concept. But I don't want to talk about a specific company like.
Okay, talk to us about the future then of activism. If where you see taking board seats, is that sort of the type of activism like we see today? Is that generally where you think the industry of activism is going?
Well, I think it's always been there. I mean, the whole concept of activism to get on the boards, and we've done it, as you know, innumerable times, and a lot of times successfully, some not successfully, to go in there and make changes. A lot of these companies have you sort of hidden jewels in them. I mean, and the board of management don't want to do anything about them, and so they're laid to waste. So that is activism, really, going in. If you and find out you have assets that aren't producing enough, and you want them to do so and enhance value. So I mean that's what it is.
Carl, it's important to add value right now when we have an economy running pretty hot. From your perspective, is the economy in the U.S. running too hot? What do you make of this inflation debate that, I mean, if Taylor and I had to take a drink every time we heard transitory, we wouldn't be fit for purpose right now in this role. How much are you currently thinking inflation is transitory or not?
Yeah, look, I really think that we're pumping a lot of money into this economy, and obviously you're going to get inflation from it. You already have it. So you have to be able to deal with that inflation, and you have to be able to put on the brakes, I think. Otherwise, eventually, we're going to hit a wall, but I don't know if that time is here yet. I mean, there's a lot of money around, and you know, frankly, you know, and I'm in one big position, that CMBX short that we have, and you know, there's so much money around, and what happens is, I think, in a system like we have, you know, there's a saying: absolute power, power corrupts, and absolute power corrupts completely. And what you have is, if you want to talk about where the country might go, you know, you have this huge wealth gap, for instance. And one of the reasons is that really with money management, with you know, I fought the entrenched establishment all my life, and you have that now. You have it in money management to some extent, not in every money management, but you know, you're selling companies, you're selling stocks today on Wall Street, and a great example really is these shopping malls that we're short. I mean, money managers like Alliance, Bernstein, and Putnam, for instance. And I'm not telling you they're bad people, and I'm not telling you, you know, they're doing it nefariously, but it is a form of a corruption. Maybe it's not illegal corruption, but it is when you go in and you're selling Mr. Jones over there, who wants to put his life savings in something, and you say, well, you know, this is CMBX that you shorted here, that you're selling insurance on. That's like treasuries. You know, you equate it to treasuries. The guy puts the money in and looks at what's happening to the malls today. It's eerily similar to 08. So you are having this problem, and this problem could exacerbate, where you really are sort of fooling the public in a lot of these. If you look at a lot of these investments today, now I'm not saying they're all bad. While I don't own cryptocurrency, I think there could be subject to it. But a lot of these investments today, like that shorting of the CMBX that those that credible money managements tell you to do, is really is very bad, because it produces a wealth gap. And when the market crashes, again, well, I'm not going to say it's going to crash, but when the market gets hit here, and it will one day, this is going to exacerbate the wealth gap. I mean, so. I think I think we're getting to certain excesses here.
But then we talk about excesses as a way that potentially we're seeing the democratization of the stock market. I'm looking at AMC running higher today. I'm looking at GameStop. That was meant to be in some way retail, giving it to the hedge funds, the way in which Wall Street is currently run. What do you make of the so-called excesses that you see there? Is that actually democratization at work when it comes to the stock market?
Well, yeah. I mean, these companies, on a value basis, a lot of these companies are ridiculously priced, just ridiculously priced, and so eventually, you just can't have this without excess inflation, and so there's going to be a price to pay for it. Look, I don't think Reddit and Robinhood and all those guys are necessarily bad. I think they serve a purpose. Money is funneling back into companies. Some of these companies might be okay, but a number of them are really, the risk reward is absurd. I go back to my example because that's my favorite one, because that's where I know a lot about. I mean, is where you're getting people, or you got people to support for only 2% return, for instance. You got people to support to sell insurance on these malls. I mean, it's an absurdity, and that's being done not by people you might criticize like Reddit. That's being done by Alliance Bernstein. So it's really we are really moving into certain excesses right now. But yeah, the ones you mentioned. Yeah, I mean,
no, this is wonderful for our global radio and TV audience. We just want to reset the stage and let them know that we are indeed speaking with Carl Icahn, of course, Icahn Capital Chief Executive Officer. So, Mr. Icahn, you mentioned something earlier about excesses, and you hinted that cryptocurrencies might be in that space. Are they? You're looking at them, but not an investor yet. What would it take for you to be an investor in crypto?
Yeah, look, I think a natural manifestation of this inflation, it's not yet there, but you had it in the 70s, and what's going to happen if you have that is it's going to a phenomenon of that is going to be for looking for other stores of value except outside the dollar, right? Because then just we're a reserve currency now, but if you keep printing the money, it's not going to be there. Now, I'm not telling you that's going to happen for sure, and I'm not even telling you, I'm not telling you it will happen. But a currency like this cryptocurrency, while you look at it and say it really has no value, that's what the critics say, and I don't own any at this point.
So
but if you're looking for something where you might have another store of value, the criticism is a little bit, shall I say, wrong-headed when you say, well, what's the value of a cryptocurrency? Well, what's the value of the dollar? The only value of the dollar really is because you can use it to pay taxes. Because you say, I can't use cryptocurrency. What can I use it for? Why can you go out and buy a loaf of bread with a dollar? So it's the same thing. Now, the only thing you can do with the dollar, that's for sure, is pay your taxes.
Do you see it as a store of value, though, or a payment system? Or with Ethereum, it's the underlying blockchain technology. What is your use case?
Well, Ethereum is the underlying blockchain. So Ethereum has two things. You can use it as a payment system, or you can use it as a store of value. So you need Ethereum or the blockchain, right, if you're going to do the cryptocurrency to assure you that you have something, right? The blockchain, see, you never had that before where you can buy a cryptocurrency and you can say, I'm safe because you have the blockchain that makes it very safe for you. I'm oversimplifying. It gets real complicated. But that is a good value. That's a great value. So Ethereum and Bitcoin are different. Bitcoin, I mean, to me, is just a store of value. Ethereum is really sort of a value-added company. Well, I wouldn't call it a company because it's a real complicated thing with all these the people that go and make sure that the blockchain is working, I guess you could say.
Carl, are these the two that you're looking at? I know that you haven't bought into crypto yet, but when you're assessing the cryptocurrency space, are you looking at Bitcoin? Are you looking at Ethereum? Are they the two main areas?
Yeah, I'm looking at the whole business. I'm not looking at what to buy necessarily at this time. I'm just looking at the whole business and how I might get involved in it with Icahn Enterprises in a relatively big way, because I do think it's here to stay in one form or another. I think
relatively big way. What does relatively big way mean, Carl?
Well, a big way for us would not be to buy a few coins or something, you know. I'm not going to buy a few coins. I don't believe in trading the market if I can help it. You know, I've learned
hundreds of millions, billions. Is that what we're talking?
Yeah, I mean, it could be. I mean, a big way for us would be, $1 billion, $1.5 billion, something like that. But that would be a sort of a big way, I guess, for us. But sometimes we go bigger than that. Sometimes a lot smaller. But so I'm not going to say exactly. But to get back to the, I guess way to really get back to the concept. But a lot of these other things, though, I think out there are overvalued. There's no question about that in my mind. But that doesn't mean that necessarily. And I would say about cryptocurrency, to get back to it, there will. I don't think there will be a lot of the survivors that are out there trading today in it. I don't think so. I think there's got to be some form of really feeling there's safety and value there.
You've been hinting on drivers of excess. We started this conversation talking a lot about some of the big spending packages we've seen out of Congress. It's fueled into a lot of the rise of the meme stocks. Within this excess that you see, where are the biggest risks in the market?
Yeah, I think in the real estate market to some extent, in the commercial real estate, I mean, look, we overbuilt the commercial real estate before COVID, and we paid way too much for it. The cap rates were ridiculously low in it. And so I think there could be problems with that. Look, the one I really know the best is that CMBX thing. To go back to that one, I look at the malls, and I think that a lot of people are going to be surprised, have been surprised already. A lot of them lost 30%. I mean, that's a ridiculous investment because you only make 2% more than treasuries. That's your best as you could do. And you really can lose 40, 50% of your money. So I think there's excess there. There's excess in some of the companies you mentioned. I heard you mention a few of them, and I think well, you mentioned a couple. I think is excessive. There are.
Can you? Yeah, no, and these are great comments, Mr. Icahn. We're loving the conversation. We are getting some reports here that you're holding a roughly $400 million stake in Allstate. Can you talk to us about some of your holdings right now, if that's true, what you like, what you don't like?
Well, I can't talk about a number of the companies that we're involved with because we're on the board, so okay. We can't really speak of them when the windows are closed. Sometimes I can talk about them, but not at this moment in most of them. It's true that we do own Allstate. I never said that publicly. We never put that out publicly. But Allstate was a good example of a company that was undervalued. Yeah, we bought it, I don't know, six months ago when it was around 90s. And I mean, but that's a good example where you could take a company. So we looked at that. I mean, I can say it. I guess it got out because we didn't publicize it. But we looked at Allstate as just a value store because if you looked at Progressive, for instance, Progressive was 17 times EBITDA, as I remember. Allstate was 7. Allstate's a great company. Progressive's a great company, I guess. So we really studied Allstate and said, why the hell is it only 7? And it's because they should be doing certain things, but they already said they were doing. So actually, this one, it might have got around that we owned it. I don't know. But we never even had to talk to the company because the company lived up to what they were sort of saying they were going to do, which was to transition a lot of their model. Well, in other words, they would take down a lot of costs that were excessive, we thought, and to go more directly to the consumer. So we did nothing there. Hey, but we did pretty well in it. I'm proud to say. And it wasn't really my idea. It was one of the guys that came in, one of the bright young guys that we have working for us, and he came up with it. And he's a guy named Andrew Tenno, and he really did a hell of a lot of work on it. I got to say, I admired his work ethic on it, and we put a fair amount of money into it. I'm not saying how much. I'm not going to tell you how much, but hey, it's obvious when I tell you, we put in, when we do it, we put in a fair amount of capital. So,
currently being reported that about 400 million was put in, so it got out, as you said.
I'm not going to, I just say that kind of investment is what we make because we don't do that many investments. We try to concentrate them. So,
Carl, for our global radio audience, for our global TV audience, I'm going to go back to an investment you made that perhaps didn't pay off in the way you hoped, HERTZ. I'm thinking into the world of AMC and GameStop that we currently see, the run-up that retail investment had in HERTZ and the exit that it's had from bankruptcy in terms of being bought out, a tussle for that asset instead, in fact. What did you learn through that process of having sold out basically at the bottom?
yeah, look, you sure can't be right all the time, as I tell you. And I will say there, we knew that company pretty well, and it was a sad phenomenon because of the COVID. We were under a lot of pressure, and it's a tough business, very tough business, and I really congratulate the guys that held on to the debt and all. And I'm not saying we didn't hold on to something there, but but it was certainly nothing like we could have. And I can only say that I got to tell you though, at that time, a lot of people didn't think that we could come out of this COVID as well as we can, so that people would be driving cars by the summer in demand. So. But look, it does help us in our other company that we own, which is the service side of Pep Boys, which, the business is booming in that. So, look, I'm glad it's coming back. So it hasn't really hurt us on completely in that. But I sure missed the turn there as far as HERTZ is concerned. And what the heck, you got to make mistakes in this business. I mean, there's nobody that doesn't. That's why I don't trade the market much, and that's why it's a difficult business. But I congratulate those guys that held it. Yeah.
One other thing that's been going on a tear, and that perhaps you've not dabbled in, the world of SPACs. Is that something you ever eye up, Carl? Something that you look at in terms of...
I can't hear you. The world of what?
SPACs, special purpose acquisition companies, the world that
perhaps
Blackman's just got into.
No, we're not in that at all. I mean, I guess, hey, look, anybody can raise a SPAC, right? Because you're making an offer. I think the SPACs are a form of taking a company public. I will say this, even although a lot of my friends have started SPACs, and I've been pushed to do a SPAC. Carl Icahn does a SPAC. You can raise a lot of money for it very easily, because then you have to come up with something and get that money into it, and there's just a lot of capital there. But really, again, it's where are the customers' yachts? The guys that sponsor the SPAC, they're getting tremendous return. They get a lot for doing it, and so I'm not trying to be sanctimonious here, but I've learned that when you're taking all that big percentage, sometimes it comes back to bite you. So we never really got into that at all. So but the people who do, some of those SPACs are really good. So I don't want to tar them with one brush. I mean, some of the SPACs, some of these guys do a lot of work hard to come out with some good stuff in those SPACs, but a lot of them. You're paying too much for the underlying companies you're buying, and I think anyway. So we never invested in a SPAC. We never bought a SPAC. We never got involved in it.
We wanted...
But go back to... So I'm saying there's a difference. It's not like we don't go into any of these things. I mean, this cryptocurrency is really interesting. The SPACs, I think, are a phenomena. Hey, look, they may change the model, and some of them are good, so I'm not going to knock it completely.
Right.
But,
we'd love to transition into just your broader thoughts on the economics, the housing market, your move to Florida. We heard from Jamie Dimon, of course, this morning, testifying in front of Congress, saying housing is a little bit of a bubble. They're not worried about it yet. I wonder what you see in Florida, if housing in Florida looks like it's in a little bit of a bubble or not.
Yeah, it could be. I mean, a lot of people are moving. In this interview I did with Bloomberg, the written interview that came out this morning, I said I love New York and always loved it, and it's really sad to see what happened to it. I don't know if it's a real move from urban centers. I mean, New York has been badly run, or is it a permanent move, or will urban centers ever get back to what they were? As I told you, I think a bubble for a while was was real estate, because commercial. I'm talking commercial real estate. I think it was overbuilt. I mean, we overbuilt it before the COVID. I think the COVID was just the nail in the coffin. But you're asking me about housing, about residential. You know, it's all where people move. I mean, everybody now, a lot of people say, well, why am I going to live in an urban city like New York? I'm paying huge taxes. It's a crime. There's a lot of crime in it. Not a well-run city. It's excesses of, and so why stay there? I mean, that's the issue. But it's a shame, because New York was so vibrant. You know, I grew up in New York. I love New York.
Is the moving out, do you see it due to taxes?
Not only taxes, it's just sad. I mean, you know, look, I was happy to pay back to New York, where, you know, I gave the money for the Icahn Medical Center at Mount Sinai, the Icahn Stadium. I really loved the place. And then it suddenly just turned bad. And I think it's partially, really, you have a mixture. When you have a mixture, it's a very, very toxic amalgam when you have the kind of government in New York we've had, and then you have all this other stuff hitting you all at once. But that's true of a lot of urban centers, a lot of cities, not all of them.
Yeah.
And does that mean it's going to last? Does that mean it's a secular change? I don't know. And then Florida obviously gets the benefit of a lot of movement down here. And will it last? I don't know. It's not like, I mean, the real estate in Florida has gone way up. Would you invest in residential in Florida? I mean, at this point, I mean, we own some real estate down here, sold it. But I'm not the right guy to ask, because I like to buy things, you know, when they're very cheap in my mind. So I'm not the right guy to say, would you buy it at this level? You know, I don't know.
You want to buy cheap, you want to then sell, and there's a question now, of course, when you lock in those sorts of gains, the taxes that come there as well, Carl. What do you make? You were talking earlier about inequality, wealth inequality, something that clearly you're thinking about. How are you thinking about the changes in taxes, potentially raising taxes on capital gains, raising taxes for corporates in general that maybe you own? What do you make of the landscape?
Well, I'm going to ask you a question. I mean, look, I always believed back in the days of Perot when they were going crazy about the deficit, and I think it was like $1 trillion, they were going nuts. So I said, oh, yeah, the country can afford to keep printing money, it can afford to go and have some deficit. But when you get to the point that you're at now, you're sort of at a party, aren't you? I mean, I don't know how. So this infrastructure would be great, and I think it would be great to have clean air. But I just keep saying to myself, how do you pay for it without having taxes? I mean, you can't just keep. I just don't think you could issue money. I mean, hey, look, the Fed. You know the old saying, "Don't fight the Fed. They know what they're doing." And I just wonder though that you know the Fed keeps basically. I mean, it's the simplest way to say it, but just keeps issuing money. He keeps issuing currency. So you go back to our old discussion about cryptocurrency. So you say, hey, after a while, why is the dollar better than a Bitcoin? Or I'm not saying to buy Bitcoin, but why is that a better store of value? And the only thing you can really say a dollar does. I mean, look, the federal government doesn't stand behind the dollar. You can't go to the federal government and say, give me gold or something anymore. So I'll just ask you, how do you get, you just can't do it without, so you have to take some dollars out of the society that you keep printing in. Even in World War II, they printed money and you had a big deficit, but they had war bonds and they had all kinds of price controls. So how do you do it here? You know, you have people buying bonds in World War II. Here, in one way or another, you got to get that money back, so you're going to have to raise taxes. I mean, that's one way of doing it. And another way is stop spending. But if you stop spending, then what happens to the economy? That's the question. And then you could argue the economy is great and it's going to keep going anyway, and the numbers are great. So is it going to go up, and how long is it going to go up for? I don't think it's going to end right tomorrow. I don't think you should go out and sell your stocks tomorrow. I'm not saying that. I don't know, but sooner or later, that party's going to have to be over, I think.
The party's going to have to be over. For our radio and TV audiences right now, Carl, I'm looking at a headline that's just crossed. The Justice Department wants a casino mogul, Steve Wynn, to register as a foreign lobbyist. That's to do with Chinese authorities, his lobbying connection in 2017, we understand. But I'm interested in how we're currently seeing business and politics continue to weave hand in hand. You're a man who understands politics deeply. You're a man who back in 2016 was talking about the deficits, as you are now, talking about the Republican Party and the way in which it was looking at that deficit, and perhaps you thought at the time getting too worried about it. What is the future of the Republican Party right here, right now? You're a man, of course, who publicly supported President Trump, as then was. What about a Republican Party with or without Trump?
Yeah, look, I've always been, and I am sort of bipartisan. I've never been involved in politics, and this is not to say that I didn't support Trump's. Trump would talk about me on TV a bit and whatever, and I personally at that time did not want to see Hillary Clinton be president. I thought I didn't like a lot of the stuff that happened, and Benghazi was it, and I personally don't like. I'm not crazy about big government to begin with, but right now I'm sort of bipartisan. I think Trump did some very good things. Some things I disagreed with completely. So, and right now, I think Biden. I mean, by issuing all this capital, I mean, hey, I don't know if you had to do it, but it did help the economy. There's no question that it did stimulate the economy. What the Fed did was stimulate the economy in a very, very bad time with the virus. So you can't say, you got to see where this goes. I mean, but you really can't have, there's a lot of things that are bad or good. So I'm not trying to equivocate, but frankly, I think this is something you got to watch very carefully and see where it goes. And I don't think anybody can predict, where it's going. I can look at companies and I can say this company is really cheap, and there's something and I really do say that a lot of the problems we got. I mean, it sort of relates to this. Is that a lot of our companies are not well run and they're not well managed, and by the way, a lot of money managers, these fund managers are I think, shall I say, not doing a great job, even though they might be making money in returns. So I would say that we should do something to. I really say maybe a lot of my friends will like it, but I think we should do what we can to control Wall Street to some extent. I think, and this excess buy-in, we should be doing something to control fund management to some extent. We should be doing more corporate governance. Now, if you did all that, a lot of these middle-class people wouldn't be losing all the money they invest when this thing hits. So, it always goes in cycles that I've seen all my life. It goes up and up and up, and the old saying is, where's the customer's yachts? So the money managers, the guys on Wall Street, the investment bankers, they all make a lot of money, right? Everything's wonderful, boom, 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 and people are making money great, in the market like today. But then when it gets hit, who gets hit? It's the poorer guy. It's the guy that listened to the investment advisors. Investment advisors, they still got pretty good. They still got a pretty good business, and also the corporate guys. So it's and I'm not even talking to the smaller wealth management guys that believe that the fund knows what to do. And I'm looking at some of these big funds, big mutual funds. So you say, well, who's the ones that suffer? It's always the little guy. That's why then you wonder why you have a wealth gap. But you have the wealth gap because
is regulation
over
needed,
the years,
Carl?
Yeah.
Or is it self-correcting by having people like yourself and your friends that you're talking to, as you say, look at Wall Street and, as you mentioned, control it from your perspective?
Well, it's not self-correcting at all unless you go in. I mean, guys like me can't correct it. It's you have to really have a big push on a governmental level. On the other hand, I want to be careful because I don't want to see too much government control. So you got to walk a very fine line. But some of the stuff that I see, some of these egregious things that are done, you mentioned a few of them. Some of these egregious investments, and I mentioned, so I mentioned the malls. You mentioned in, GameStop. These things, who pays for that? At the end, the small individual is going to pay. And then you say, why is there a wealth gap? And I think that's part of the answer to it. That, you know, some of these things are just go to excess, and that's where I think we're going now. We're going to excess in a lot of things. Being that said, hey, look, I'm just a guy that, you know, I fought the establishment all my life because somehow it irritates me when I see it. But hey, I'm not going to be sanctimonious. I mean, I have a company that I run, and that's, you know, I could have gone to the White House more maybe, but I look at it that I run this company. I'm an old guy.
Yeah.
I've got, you know, I'm very proud of the record I've had over the years, and that's what I do. So I could just tell you, you know, these companies I think are undervalued, these are overvalued. Maybe this is something to be looking at, but I can't answer the big questions because I don't think anybody can.